It looks like the Fed is pretty divided over what to do next on interest rates. The minutes from their July powwow show Jerome Powell and the rest of the Open Market Committee saw a 25 basis point cut as a recalibration of policy. They were reluctant to label it as the start of a new easing cycle. Let's talk more about the Fed with Scott Brown, chief economist at Raymond James. Good to see you again, Scott. Scott, Jay Powell will be up there on Friday giving his speech. Do you think it is time for him to show he has a little bit of backbone here against the president?
Well, I think that's certainly the case. I think the Fed really sort of tunes out all the political noise that they get. If you look through the Fed policy minutes, the detailed transcripts, they never really talk about the politics at all. They've had job owning in the past, but nothing really on this kind of scale that we've seen from President Trump. But I think it goes in one ear and out the other. I think they're going to do what they think they have to do to set the economy on the proper course.
Scott, what do you think Jerome Powell will say?
Well, I think we'll see sort of an echo of what we got from the Fed policy meeting minutes yesterday. That is, no real presumption about future policy moves. I think the market's certainly gotten way ahead of itself. There was a while where we were starting to look at a question of whether they would do 25 or 50 basis points in mid-September, and I think even a mid-September move is got to be an open question, although it's nearly fully factored in again. The Fed sees an economy that's still in pretty good shape. You have some drag from trade policy uncertainty, some drag from a weaker global economy. You're missing your inflation target, but you're also seeing very strong consumer fundamentals. You're seeing a soft patch in capital investment, in manufacturing. That could end up just being transitory rather than the start of a more sinister downturn. So I think it's kind of a wait and see attitude. And so the markets may need to do a little bit of adjusting, particularly the federal funds futures market. But I think it's still an optimistic outlook on the economy that we should continue to muddle through at this point, at least for the near term.
Scott, noted Fed hawk and voting member Esther George sat down with our Brian Chung this morning at Jackson Hole, pushed back a little bit on the need to cut rates further here. How worried are you about what it seems to be growing dissent inside the Federal Reserve?
I wouldn't say it's growing dissent. I think it's a fairly wide range of opinions, but we think the general push is agreement that an insurance cut would be warranted at this point. There's nothing in the minutes to suggest that they need another insurance cut in mid-September. Obviously, there are a lot of moving parts, but I think it's more interesting I think what he's likely to say is more in tune with the theme of the symposium here, and that's challenges to monetary policy. That sounds very broad, but if you look at the teaser that we got from the Kansas City Fed, this is really about sort of the international interactions among central banks. That is, you may have one central bank that's on one policy path, as the Fed has been in terms of removing accommodation, whereas others are more lenient. How does that affect exchange rates, commodity markets, the financial markets in general? I mean, I think these are very serious issues. And I think the bottom line is that, the Fed's got to do what it's got to do for the domestic economy. But it does need to take into account the blowback from the rest of the economy.
Scott, real quickly,
do you think raising rates, we know that has an effect on emerging economies.
Scott, do you think we're headed toward a recession later this year?
Not toward later this year, but I think the odds certainly have increased. We're watching the labor market indicators very, very closely, and I think if we do start to turn lower, it's going to come through the labor market. But at this point, again, I think the odds are a little bit higher for next year.